Following an earlier clash with some of the former senior managers at Hewlett Packard, the chief executive of the company, Carly Fiorina, needed a new strategy for year 2000. She needed to identify how to take the company forward from 2001 for 5 years. We look at what happened from 3 perspectives. First, the strategic options available to Hewlett Packard HP. Second, the choice made. And third, the strategic implementation and its consequences, which ultimately led to Carly Fiorina being sacked. It's not every day that a company sacks its chief executive. There were at least 4 strategic options available to HP. The first was to invest further in its printing and imaging systems. These were the biggest profit earners at the company, and there was probably some more growth. The second option was to invest further in the low-end personal computer market, probably by an acquisition. At the time, the market leader was Dell Computers, but HP also had a useful market share. The problem was that this market was beginning to be like a commodity, products with little competitive advantage over each other and sold mainly on price. The third option was to enter the high-end computer server market. It was still growing, but there was already a dominant competitor, IBM. HP already had some presence in this market, but it was small. The fourth option was to move into computer services. This was highly profitable, but required very different skills from a manufacturing company like HP. In addition, IBM also dominated this market. After careful consideration, Carly and her senior managers chose option 2. The company bid for a rival PC company called Compaq, for which it needed not only the agreement of the Compaq board, but also the shareholders of Hewlett Packard itself. And this was the problem. Some of the former senior management of HP were still shareholders. They mounted a vigorous campaign against their own directors, including Carly Fiorina. They lost by a hair's breadth, 49% to 51%. So Hewlett Packard acquired Compaq in 2002 for $21 billion US. To implement the deal, there then followed a couple of years of company reorganization. Product ranges were rationalized, sales forces combined, PC manufacturing combined together. But neither the former senior managers nor the shareholders forgot the close-run battle against the HP board of directors. When the new acquisition did not pay off in terms of increased profitability by 2005, the company blamed Carly Fiorina, and she was asked to leave. Carly Fiorina still remained a senior figure in US industry, but she was no longer the head of this major corporation.